Mhm. Hello and assalamu alaikum everyone. I am Kashif Kamran and welcome to the AAA mock debrief. And this is a mock debrief for the ACCA September 2025 mock, which is available on the ACCA practice platform. Now, with exams just under 12 days away from now, it is very, very important that all of you must have done the mock exam by now, or you're planning to do it over the next 2 to 3 days. But please ensure that you watch this mock debrief after completing your mock exam and try to identify the improvements you could have brought to your answer. And I will be talking about some mistakes even the students do journally in the question number one, because the agenda today for the mock debrief is to look into the question number one for 50 marks. And this is a session one of the mock debrief. The mock debrief will be having three sessions, one each for a question. So there are three questions in the AAA paper. So there will be three sessions in total. Let's open the question number one, the session number one. Let's see what was inside the question number one, and then we'll go to the practice platform for a proper debrief. Let's do a scan of the question number one. The question number one was set around a Regal Leisure Group, and it was mentioned in the scenario that it was a new audit client for the audit firm, and the name of the audit firm was Baxter. Number two, there were four requirements in the partner email, which is very typical, and the terminologies were changed accordingly to reflect the IFRS 18. And I've already done a session on IFRS 18. If you have missed on that, it's on my YouTube channel, and you can simply go to my YouTube channel and search for that video. Or else you can use the simple link in front of your screen, which is bit.ly/IFRS 18 by Kashif Kamran. Now, in that particular session, even when I was doing the IFRS 18, I was using the mock question number one to tell students that how the examining team has also changed the terminologies in accordance with IFRS 18. For example, the profit before tax was now used as profit before income tax. And a lot of time in the mock question, we saw examining team telling about operating profit rather than profit, because we know there are different sections of profit or loss statement now under IFRS 18, the operating, investing, financing, etc. And we've already covered that in the previous session. There were four requirements, right? The first one, because it was a new client, so the first 5 marks requirement was the planning matters for the first year audit, which has come even in the past papers if you have done them properly. This is a repetitive question. Then we had a risk of material misstatement. We know that's been a mainstay of the question number one. Audit risk is not coming very regularly. It's more about examining team asking for the significant risk of material misstatements and evaluating and prioritizing them. It's becoming more regular in exam papers now. And it was for 19 marks. Then there were procedures on impairment. We know impairment has been in the past papers as well. A couple of times you've seen questions around impairment and procedures on impairment for 6 marks. And you know, it's one of our favorite area of your examining team questioning you around IAS 36. And finally, ethical and professional issues for 10 marks. Now, that's a regular or a more typical way the question number one is blended. We know there is a requirement about risk, at times business risk or ROM, at times audit risk, but there are requirements on risk. That's a mainstay area. Ethical and professional issues are becoming more of a regular area. Procedures is another regular area, and then fitting the 5 marks around planning for the first year audit. So this is the scan of the first question. Now let's just go to the practice platform. And on the practice platform, I've already written the answer on a Microsoft Word, so I will be showing you that answer, sharing that answer with you. I'll not be writing the answer in the session, but I will be talking about the common mistakes on the practice platform before we jump into a proper written answer and then guiding you about how to score marks. Okay, just let me show you the practice platform. I hope you can all see the practice platform in front of your screen now with the AAA September 25 mock exam in front of you. Can you just please confirm that quickly? Okay, great. Okay. Now, uh, I have been very vocal of the time management, and I've been very vocal of the stop and move strategy. I was evaluating some of the mock exams of the student, and I was so very happy that in a couple of mocks, I saw the student writing time up, and he was just about to complete the question number one, but he left it there and mentioned time up, and he went to the question number two. Now, this is the strategy which is to be excel, because stop and move strategy is where you are prioritizing opportunities rather than killing opportunities. Now, that was so very comfortable for me looking at some of the mock exams sent to me on my email, which had that statement, time up, and they didn't complete it, the question number one, and they went to question number two. That is the best strategy you can undertake on the day of the exam. Now, you know the question number one, time management. You know you have 1.95 minutes per mark. Now, a lot of times the students ask me a silly question. Even yesterday, when I was looking into my WhatsApp messages, there was a question from a student asking that when we look at the wrong answer of the examining team in the standard answers, it's almost like 8, 10 sentences. Are we expected to write that longer? Now, my answer to the student was that how many times I've told you that examining team answers are tutorial guidance. You are not idealizing them. You can only idealize them if you want to fail. You can learn from them, but you cannot just idealize the length, how long. That's the biggest mistake. Now, I message the student that you know that every ROM is worth how many marks? Tell me. How many marks we have for each ROM in the AAA paper? Generally, what's the marking scheme for a ROM? Very good answer, Rasik and Adnan. 3 marks, right? So 3 multiplied by 1.95 is how much? Because every mark is 1.95 minutes. So 3 marks means multiplied by 1.95 is equal to, can anyone give me the answer? 3 marks multiplied by 1.95 is equal to what? 5.7. Okay, so you have roughly 5.7 minutes or 5.5 minutes, right? On the safe side. How long can you write in 5.5 minutes for a ROM? Now, we know there are certain ROMs which are without accounting treatments, like first year audit or like internal audit or something like that, or even management bias, the non-accounting treatment ROMs. And they give us 2 marks, right? Not 3. But if you have an accounting treatment, now we know accounting treatment vary. The amount of sentences you will be writing. Now, for example, in this mock exam, we had something about impairment. Now, impairment is a pretty long accounting treatment because first you need to talk about the carrying amount and the recoverable amount. Then you need to talk about the recoverable amount being the higher of the fair value and the value in use. Then you need to talk about what management has done wrong, either in value in use or the fair value. So probably you're going up to like 3 to 4 sentences on the accounting treatment for like ROM, for the accounting treatment for impairment. But if you contrast that with a related party transaction, for example, it's a disclosure. So you will say that this is a related party transaction, but the management has not given a disclosure of the related party transaction, and the relevant standard or the IS 24 requires all related party transactions to be disclosed in the notes to the financial statement. Now that is it. And if the management has not given a disclosure of a related party transaction, then the financial statements are materially misstated. Now, every accounting standard, the length of the treatment you are writing will vary. So, uh, 5.5 minutes for a 3 marks ROM. Check yourself in the next 24 hours. See how much you can write in 5.5 minutes. How many sentences can you write in 5.5 minutes? It has a materiality statement. That is it material? It has an under and over statement, and then it has an accounting treatment. Now, see how much can you write 4 sentences in 5.5 minutes, 5 sentences in 5.5 minutes? That is the best length of a ROM you can write in the exam paper. Is everyone clear on that? So, what is the length of a ROM? What you can write in 5.5 minutes? Because that's the 3 marks writing time in exam. Is everyone clear on that? Will you check yourself today how much you can write in 5.5 minutes? All of you? And for every student, that length will be different. But if you idealize the length of the examining team, that is a worrying thing for me. Because if you start idealizing the length of the examining team, not not looking into the fact that the examining team answers are tutorial guidance, you are not even completing 50% of your exam paper on the 1st of September. But if you want to complete the maximum percentage of your exam paper, please remember the rule of 1.95 minutes per mark. So for a 50 marks question, the question number one, how much total time we have? 50 marks multiplied by 1.95 minutes. So what's the total time of the question in front of your screen currently? How much time I have told you for a question number one? Quick answers. 97 minutes, right? And Vijay, out of the 97 minutes, how much is the reading and planning time? 24 minutes. So that's really good, Vijay. So you are remembering the rule, right? It's 97 minutes, the total time you have for the question number one. Thank you, Ellen, for that confirmation. 24 minutes for the reading and planning time. Now, I would just like to do a quick exercise with you because a lot of time I've seen students struggling to know or struggling what to do in 24 minutes. Let me see if I can do a realistic presentation for you that what exactly are the steps you need to take in 24 minutes. Reading and planning time to me is the most important thing. Just let me focus on that. Okay, now the moment you open your exam question on 1st of September, you know there is a screen on the right and there is a screen on the left. The left is all the exhibits and your response areas, and the right is just the introduction. So you will quickly read this introduction in just a minute out of the 24 minutes, right? Now, this introduction will definitely tell you about the date that it is the 1st of July, and this information will also tell you about the name of the audit firm. It will also tell you the name of the client. Is it a group or is it not a group? Is it a listed company? Is it not a listed company? Is it a new client or is it not a new client? And a lot of times the student asks me a question. If the question is silent, the question is not telling us is it listed or non-listed. What we assume it's a non-listed. If the question is not telling you it's an existing client or a new client, what we assume? We assume it's an existing client. If the examining team wants to draw the attention, the examining team would be very careful. If the examining team wants to tell you it's a new client, they will tell you. Otherwise, they will be silent. If they want to tell you it's a listed company, they will tell you. Otherwise, they will not. So you need to understand these fundamentals, right? So this opening paragraph here will be telling you about lots of things. First of all, it's the 1st of July, so it will tell you the date because that's the date when we do the planning before the year end. The year end of the company is 30th of September, so you're doing the planning stage. The name of the company is Regal Leisure Group, so it's a group basically. And your audit firm name is Baxter, so that's the name you have to use in your answer. And the group operates a chain of premium leisure clubs and spas across the country. Regal Leisure Group is a new client of your firm, right? So it's a new client of your firm. So that's an important information. And we are assuming this company is non-listed because no information has been provided to us on that. We have been given 4 exhibits, 1, 2, 3, 4, and each of the exhibit contains certain information. Definitely the first exhibit always is a partner email, and the partner email is important to read the requirements and to understand the factor on which you base the materiality. Now, this right side of the screen is 1 minute. And in 1 minute, you know the name of the audit firm, the name of the client, is it a listed company, is it a non-listed company, is it a new client, is it an existing client, etc. And that finishes off the requirement, that finishes off your 1 minute of 24 minutes. Now you have 23 minutes. The next step you do is you quickly open up the partner email just to see what is being asked for. And simultaneously, you open up the word processor because you need to set up a briefing note. So you open up this and you set up a briefing note in your word processor. So both these windows will be opened simultaneously. Now, the moment you start your 23 minutes, you will copy paste immediately this to from subject date, and you will bring it to your Word file. You know you have to write a briefing note. You're very habitual of that. So you simply say briefing note and you copy paste this to from date subject, and you will say to from subject and date, and you know the to will become the from and the from will become the to. So you will just swap the positions. So from cut and you take the from to and you will take the to from. So that will just be a swapping of the positions and you're done. You know that after the date, you need to write the introduction of the briefing note and then whatever you need to do. Okay, just let's see what is here. Hello, you need to start the planning of Regal Group. To help with this, I have provided you with some relevant information. As you know, the group is a new client of our firm, and the firm client due diligence, know your client, and acceptance procedures were successfully completed. So we have successfully completed the know your client procedure, and we have taken on this client, knowing that it's a good enough client to take on, right? So we have accepted this client. It's a new client. That's an important information. So we can just write somewhere it's a new client in our word processor, because every important information should go to the word processor, which later helps you write a good answer. Okay, I met the group finance director yesterday to discuss number of matters, including some recent business development. Based on the analysis I have done on the industry, I have decided to use the profit before income tax. See the change of terminology, IFRS 18, profit before income tax to determine the materiality. So you have to use the profit before income tax to determine the materiality. That's another important information. So you will copy that and paste it in your word response area. So new client, and you have to use the profit before interest and tax as your materiality, right? Okay, then you go down further. The partner is saying, I want you to prepare a briefing note. You are very habitual of that, that every time you have to answer in briefing note. Now, I want you to do four things. Number one, A, discuss the matters specific to planning the initial audit engagement. So you have to discuss the matters specific to planning the initial audit engagement. Control C, and you bring it on your response area, number A, and you say, okay, this is what I have to do. Now, how many marks you have to discuss the planning matters? You have 5 marks. You will remove the marks once you've done the answer. But why are you keeping 5 marks on your response area? To know I have to write 5 points. 5 points means 5 marks for discussing the matters specific to planning the initial audit engagement. Okay, please ensure these note numbers are always ignored by the student. These note numbers are very important. They can change the answer. Please don't ignore the note numbers. Note, you do not need to discuss the matters relating to whether it was appropriate for Baxter to accept the group audit. They have already accepted. So no arguments on whether they should have accepted. No arguments why have they accepted. So you're not giving any arguments on the acceptance. They have accepted it. It was a good client. They have done the know your client procedures. So please don't go into that sort of a discussion where you start challenging why Regal Group has been accepted. No such discussions on that. You have been refrained from it. Okay, B. Using Exhibit 1 to 3, evaluate and prioritize the significant risk of material misstatements. So you need to consider the significant risk of material misstatements only from Exhibit 1 to 3, not Exhibit 4. And you have 19 marks for that. So you bring down your B requirement. And in the B requirement, you have to use the Exhibit 1 to 3 and you have to evaluate the significant ROM for 19 marks. Now, when you're writing the answer for ROM, in the B part, the very first heading which will come in the B part is the heading for materiality. You will write the paragraph of materiality. And in that paragraph of materiality, you have to use profit before income taxes as your basis. So you will just bring it right over here. A new client, yes, it could have an impact on the risk of material misstatement on the opening balances side, not detection risk because it's not an audit risk question. But yes, the opening balances could be at risk because it's a new audit client. So you can write something about the new client in terms of the opening balances. So again, this point would be very valid for the ROM part as well. So we have 19 marks of ROM Exhibit 1 to 3. Okay. You need to determine the materiality as mentioned in the partner email. That's fine. Number C is design the principal procedures in relation to the impairment. So we have to make procedures in relation to impairment for 6 marks. So that's number C. We need to write procedures on impairment. And how many procedures we need to write? We need to write 6 marks, 6 procedures. Please remove the marks once you have done the answer. And lastly, Exhibit 4, evaluate the ethical and professional issues. So only from Exhibit 4, ethical and professional issues, and recommend actions, safeguards even. And we have 10 marks for that in the requirement number D. So we have 10 marks for ethical and professional issues, but for that we only have to use the exhibit number 4. Now you're structured. You know where to write the materiality paragraph. Right under the requirement B. So under the B requirement, you will write materiality paragraph. And you know under the B requirement, because examining team wants you to prioritize the significant risk. So you also have to give a conclusion paragraph. Conclusion paragraph at the end of the ROM requirement, where you will tell the basis of your prioritization. So it is also known as a conclusion paragraph, or you can also say, you can also give the heading prioritization. That's also a good heading. So either a conclusion, either a prioritization as a heading at the end of the ROM answer, where you justify in 2 to 3 sentences what is the basis of your prioritization. So you can write in any order when you're writing the ROM. But in the last paragraph, in the prioritization paragraph, or in the conclusion paragraph, you will just justify that, suppose the 6 ROM I wrote above, which 2 of them or which 3 of them are to be prioritized and why. A lot of times the student tell which are to be prioritized, but they don't tell the why. And that is the most important thing. You're not just telling that the government grant is to be prioritized or impairment is to be prioritized. Examining team is looking for your judgment. Examining team is looking for the basis why impairment or why government grant is to be prioritized. What is the reason? What is the underlying reason? So please do mention the reason. That is very, very important. Yes, it could be quantitatively material. That's one of the reasons. There could be other reasons like subjectivity. There could be other reasons like management bias. So there could be multiple reasons why you choose the 2 of them to be prioritized. But it's not just telling that this and this are to be prioritized. It's important to tell that why this and this are to be prioritized. The why is the most important element. So we had 24 minutes. 1 minute was gone when we read the introduction. We had 23 minutes when we opened up the word processor and the partner email. Now, from that 23 minutes, we started structuring the briefing note. We read the briefing note. We read the partner email. We structured the briefing note and we read the requirements. We read what needs to be done. Probably another 4 minutes would have gone from here. So ideally, you're standing at 19 remaining minutes by the time this briefing note is ready. But at least you know what is to be done now. You know where to put the materiality paragraph. You know where to put the conclusions. You know which exhibits to be read for ROM and which exhibit to be read for ethical and professional issues. Now, one important thing, you don't need this exhibit 1 anymore because it's only telling it's a new client. Otherwise than that, there is no risk of material misstatement in exhibit number 1. So just close the exhibit number 1 now. You don't need it further. For the remaining 19 minutes, you don't need it, right? Okay. Now, when you are about to start the exhibit 2, exhibit 3, and exhibit 4, because from there you will get the answer for ROM. From there you will get the answer for procedures. From there you will get the answer for uh, ethical and professional issues. Planning matters for the first year audit. We know it's a new audit client, so you will be writing the planning matters very journally. The planning matter doesn't need any exhibit, right? So you know the planning matters. It's like corresponding with the previous auditor, reviewing the working papers of the previous auditor, or having more knowledge of the business, performing more elaborated analytical procedure because it's a first year audit, or ensuring that the working papers around opening balances are reviewed because there is a risk of opening balances. So that is important planning matter for the first year audit. You need to be more skeptical in terms of your planning gathering of information because it's a first year audit. So these are all sort of planning matters which comes in the first year audit, but they have no relevance to the case study. So for the first 5 marks, you're not referring to the case study anymore, right? Yes, the predecessor auditor is a very important matter, right? When you are planning the first year audit, because the information you must have got from the predecessor auditor that will help you identify the risky areas. And the predecessor working paper would also be helping you with the opening balances and gathering information about opening balances. So that predecessor auditor is an important matter for the first year audit. We'll just come back to that. Now, 19 minutes. Discuss the matter specific to planning the initial audit engagement. Now, that's a knowledge question. So you will fill when you start writing in the later 74 minutes of the writing time. But you have to fill up the B and you have to fill up the C and D by reading the exhibits. Now, just showing you an example. You open up the background information. Now, that's where the exercise for ROM will start up, right? Okay. Now, in this exhibit number 2, they're giving you some paragraphs. So it's telling us that Regal Leisure Group is one of the leading provider of premium leisures and spa. The group currently operates 25 leisure clubs and spas that offer memberships based access to fitness clubs, spa and fitness facilities, spa treatments, fine dining, wellness program. In recent years, the group reputation for excellence has supported steady revenue growth. So one of the reasons for revenue growing is their excellence. So if you find revenue increasing, so one underlying factor is excellence, but there could be management bias behind revenue rising. Para 3, the group is restructuring as part of a strategy for continued growth in revenue and profitability. And what are they doing for restructuring? It is investing $5 million in a newly formed company, Aurora Company, representing 50% of the share capital of the company. The remaining 50% shareholding is owned by a random company, an unrelated company. The contract behind this investment states that the group and random will work together to establish a new network, and the investment is likely to take place in August, and the year end is September. Now, definitely, this is a joint venture. You're investing 5 million. 50% will come from the company, 50% will come from random company, and the contract states that you will be working together. You will be working together. Now, this is the joint venture risk. The management should use the equity accounting joint venture. The management should use equity accounting, and probably if the management can do some mistakes in accounting for this joint venture under equity accounting, we can have possible under an overstatement. I'll show you the answer for that. But that's your first risk. You copy pasted in the reading and planning time. Joint venture, and you can write after when you have the writing time. You go down, next paragraph. Okay, so this information has been taken. Okay, next. The group is negotiating to acquire Zenith, a competitor that operates a chain of regional leisure club. It's likely that the acquisition will go in the first quarter of the next year. So it's like a non-adjusting event, right? Next quarter of the next financial year, the anticipated purchase price is 20, while the fair value of the net identifiable asset is 17 million. So this is like a non-adjusting event, and the management should give a disclosure of this acquisition in the notes to the financial statement with proper details about its anticipated purchase price and net identifiable assets, so the shareholder knows about the proposed acquisition in the first quarter of the next year. So we have a proposed acquisition as the next risk, proposed acquisition as the next risk, and you copy paste this paragraph here. So then when you come to writing, you know this paragraph. You need not to go back to the exhibits. Please ensure the way you are copy pasting, because if you're copy pasting in an inappropriate manner, you will go back to the exhibit in the writing time. I would not like you to go back to the exhibits in the writing time. So copy the big chunks so you remember that when you're writing, you will rephrase. You cannot just have those big copy paste chunks in your answer. Examining team would not like that. But why are we copy pasting? So that we remember what to write in the remaining 74 minutes, and we should not come back to the exhibit 2. Okay, lastly, in January 20X5, Regal received a grant of 12.4 million to support energy efficiency and whatever. The only condition attached to the grant is The only condition attached to the grant is the half of the amount must be used to upgrade existing assets to make them environmental friendly. None of the amount received is yet spent. So you have not even spent a single penny of the amount you received in January 20x5. So and your year end is September. So January, February, March, April, May, June, July, August, September. 9 months to the year end. In these 9 months, it is July, right? We're standing in July, but up to the year end is 9 months. Not a single penny has been spent as of now. And the full amount is included in the operating profit. See, that's the change of terminology. IFRS 18, the examining team would have said profit. They're saying operating profit because we know we have a category of operating profit now in the projected financial statements. So 12.4 million included. Now that's where the operating profits are overstated and the deferred income is understated because you have accounted for 12.4 million in full rather than you should not have recorded it because you have not even spent a single amount. You will only record it when you start expensing it out. So we have another risk. You receive a grant and you have included this in full in operating profit. So control C and you highlight this in yellow that I've taken all this paragraph. So the third risk in the order becomes the government grant. Now you have to write the risk in the order, in whichever order they're coming. Leave aside the prioritization. The prioritization, you have a last paragraph, conclusion paragraph. In the conclusion paragraph, you will tell which two of the above risks are to be prioritized and why. Then you can choose the quantitative materiality, the biggest, the highest one, and so on and so forth. But you are just writing them in order when you're going down writing the answer. So we have a joint venture risk at $5 million. We had a proposed acquisition, which is a disclosure, but we had a value associated like $20 million, but that's only disclosure oriented. But we have a government grant with a value of $12.4 million, and it has been wrongly recognized currently. Three, that finishes off the exhibit number two, and we are not coming back to it later. Exhibit number three. Now, in the exhibit number three, the very first thing we get to know is revenue. The revenue of the company is rising, the rising by quite a lot. Can anyone find the percentage rise of revenue from 74 million to 90 million quickly? Can you find the percentage rise in revenue quickly? How much revenue is rising? Waiting for your answers, please. It's rising by 16 million, but how much is the rise? 21%. Thank you, Vijay. 21% or 21.6%, right? Is the rise in the is that a significant rise? Can we be alert of the management bias? Even though they're telling some exceptional performance have led to the revenue rising, but should we be skeptical? Negativity, management bias, some sort of those things, right? Okay, good. Look at this. The profit before income tax. Is this an important number, profit before income tax? Because we need this for materiality. 12.4 million. But for 1 minute, think. We had a same identical amount in the exhibit 2, 12.4 million, which was government grant. Look at the government grant, 12.4 million. And have they recognized the government grant in full? Yes. Without a single penny spent, they've recognized it in full. What if they would not have recorded the government grant? The profit before income tax would have been zero, right or wrong? Had they not recorded the government grant, the profit before income tax would have been zero. So, how significant is the government grant in terms of prioritization? When you write a conclusion paragraph, so in the prioritization, the government grant should come first because it's not just 12.4 million, but the 12.4 million is an identical number to your profit before income tax. That means your profit before income tax ideally would have been zero had this not been recognized. So how important? Now, do you understand that it's not just telling examiner that the government grant is to be prioritized? Why? Examining team would love to look into the comment that the government grant is to be prioritized because it's a significant ROM because $12.4 million if not recorded, would make your profit before income tax to zero. So how important is that? Are you getting my point? Because a lot of time the student failed to write the justification in the conclusion paragraph. Okay, so we have $12.4 million. Is that an important number? Yes. Where we need this number, $12.4 million, in our materiality paragraph for us to calculate the materiality. So we just copy paste 12.4 million and we bring it down under our materiality paragraph, profit before income taxes. And we know the profit before income tax is 12.4 million. Fine. Okay, we move further. Revenue is rising by 21 million. We can write it somewhere. We might need to refer it as a management bias. Revenue, we can make a paragraph, 21.6% rise. Okay. Please ensure when you're copy pasting from exhibits, do every possible copy paste so that you need not to come back to them later. Okay. Total assets, fine. Number of the leisure clubs have increased. Number of members have increased. Okay. Business developments. How much is the increase in number of members? Can anyone find me the percentage? How much number of members have risen in terms of percentage? Quick answers, please. How much number of members have risen? 9.5%. Okay. And how much revenue has risen? So seems quite strange correlation, right? Now, revenue has risen by 21.6%, and the have uh, risen by members have risen by 9.5%. So we need to be skeptical as auditors. Negative thoughts should come in our mind if you want to be a good auditor on 1st of September. 9.5. So there seems to be some sort of an um, overstatement of revenue here. Okay, so we were in exhibit number 3, sorry. Okay, business development. Revenue is projected to grow as compared to last year due to marketing initiatives in February. So they have taken some marketing initiative, but we need to be skeptical as auditor. We are not trusting managements. We need to be skeptical that what if this revenue is overstated and it's shown more, because that would help your profit number as well, $12.4 million profit number. Because if revenue is overstated and the grant is not recognized, you are a loss-making company. Agree or disagree? Is the revenue is overstated and the government grant should not be recognized, your profit before interest and tax ideally is a loss number. You had a loss before income tax. A new customer relationship management system has been introduced during the year to streamline membership renewals and billing and provide more timely information on the financial performance. So they have introduced a new customer relation management system. Now, this system is very important for your revenue. A new system. Generally, new systems have risk because they might not be operating well. They have some malfunctioning, some errors, because the initial timeline of the new system, like 1 year, under 1 year, the new system is very risky because the people working are learning and the integration would be an issue. Data from the previous system was transferred to the new system in February, and the two systems run in parallel for 2 months, while training was given to the staff and the new system was monitored. Now, despite the fact both systems run parallel, the data was transferred from the previous system to the new system, and the staff was giving training. Is there still a space of errors? Is there a space of malfunctionings? Is there a space of wrong transfer of data? Is there a space for wrong transfer of data? So, do we have some sort of control risk over here? Parallel systems, data transfer, training. But with all that, is there a human error? Is there a human lapse? Can that be possible? Should we think negative? Right? So this new system is connected with what? This new system connects with revenue, right? So revenue could be at risk. The revenue could be under overstated. So let's talk about this new system here, and we're bringing this new system, Control C, and we're bringing this new system into our new system, right? And we copy paste this here. Fine. Okay. So we have a new system. One of the group coastal leisure club was damaged in March, where a severe storm occurred. High wind destroyed the part of the building roofs and heavy rain led to flood and damage, and etc. The club has not operated since storm. So March, the storm came. March, April, May, June, July. We are in July, 5 months, and to the year end, it's like 9 months. And the club has not operated since the damage. The finance director has performed an impairment review, which is good, on building and equipment, and the impairment loss has been recognized, which is wonderful. Impairment review conducted, tick. Loss recognized, tick. Two good things, but we need to understand, have they done any mistake in the impairment loss? Detail of the impairment loss is as follow. Carrying amount, 5 million, fair value, 0.75 million, and value in use, 3.8 million. So value in use is higher. So on the basis of value in use being higher, they have recognized a loss of 1.2 million. So that's the difference between 5 million and 3.8 million. The fair value less cost to sell has been estimated. Now that's the first risk. When you estimate a fair value, there is a risk of management bias. They could have estimated it wrongly based on the sales proceeds which could be generated from selling the damaged equipment. The value in use is estimated. Again, estimated. Everything estimated carries the greater risk of subjectivity. The value in use is estimated based on future sales, which could be generated, based upon future sales, which could be generated if the damage to the building is repaired and the new equipment is put to the club. When you take the value in use, do you take the present condition of the club? But over here, they're saying if the building is repaired and the equipment is put. Is that a wrong way to determine the value in use? Should we take the value in use on the basis of the present condition? Have they taken the present condition? So have they calculated the value in use rightly or wrongly? They've wrongly calculated. So can the impairment loss be understated? Yes. Can the impairment loss be more than 1.2 million? Yes. So the value in use is an issue here, right? So if you copy paste the impairment, the club has not operated, management has done the impairment. And the problem with the impairment is that they have not rightly determined the loss, even though they have done the impairment, which is good, but probably the loss should be more. Impairment, copy paste impairment here. And the problem in impairment is the value in use, basically. And even the estimation of fair value could be wrong. So that's the problem. And how much impairment have they recognized? 1.2 million. So we'll see, is it material? Okay, the last para. The group has received a formal claim from EcoGuard, a multinational environmental pressure group. EcoGuard allege that certain operational practices at the group Seaside Club are resulting harm to the local marine ecosystems. Damages of up to $2 million are being claimed by the multinational environmental group, and the group is in preliminary negotiations to settle the matter without public disclosure. They want to settle this matter without any public disclosure, but there is a damage of $2 million. So we need to understand the need to recognize the provision or a need to give a disclosure as in like a contingent liability because you are in the preliminary negotiations. The damages are being claimed. Look at this word here. The damages are being claimed. So probably we have a probable outflow, a reliable measure, $2 million, probable outflow. So it seems more like a provision to me than it seems to me like a contingent liability. So damages up to 2 million are being claimed. So we have a reliable estimate, a probable outflow, and arising from a past event. That's basically the harm to the ecosystem. So management should recognize the provision, and that's the proper accounting treatment here. So damages being claimed. So we have some EcoGuard and damages being claimed from EcoGuard. So that would be the last paragraph coming on my word processor here under the heading of EcoGuards because that's the name used by the examiner. So we write under EcoGuard the need for a provision and $2 million provision. So that's where ICE 37 or that's where provision would come in. Now you're finishing off Exhibit 2, 3, 1, new client, Exhibit 1, 2, 3. We got all information. We even got the materiality, profit before interest and tax, and we got 12.4 million. Now look at the order in which we are writing the answer. We're writing the answer in whichever order we got the flow. We first got joint venture for 5 million. We then got a proposed acquisition, which was a disclosure. Number two, we got a government grant for 12.4 million. Number three, we got revenue rising by 21.6 million and a new system coming with revenue. So we had some sort of a management bias here, and that could be a separate point. A new system can be a separate point because new system links with control risk. And then you have impairment, very important matter because they have calculated the value in use wrongly. And then we have EcoGuard and the provisions. So first of all, just check yourself how many marks you had. You had something like 19 marks here. And you know, from these 19 marks, how many marks have to be taken for materiality of these 19 marks? 19 minus 3. You take 3 marks for materiality. So how many marks are you left with? 16. So if we assume that every ROM is 3 marks, how many ROMs should we be writing for 16 marks? If we assume every ROM is for 3 marks, how many ROMs should we be writing for 16? 5 to 6? 5, Mohammed Rasik, 5 will make it 15, right? 5 multiplied by 3 is 15. So we're writing less. I think 6 is better because 6 will take us over 16, right? So do you all agree that 6 are better? 5 multiplied by 3 is 15. So we have one short of 16, right? So if you write 6, at least we're going over 16, right? So in this case, 6 ROM would be good, right? To go over 16, to go over the line. Now see how are we going? Joint venture. Do we have a number over here? Joint venture. Do we have a number? 5 million. Do we have an accounting treatment? And do we have an under and over statement? So joint venture will give me how many marks? 3. Joint venture will give me 3 marks, right? Because I have materiality, I have a treatment, I have an under and over statement. Proposed acquisition. Proposed acquisition was a disclosure. So we have an accounting treatment for disclosure, IS 10, even after the balance sheet date, non-adjusting event. Treatment. Is it material? Yes, because it's not just a $20 million. It's group is negotiating to acquire Zenith. Acquisition is material by nature. When you're acquiring a company, it's something material by nature. So it's material by nature, not just the $20 million amount, but we need to give a disclosure because it's a material event. And it's a non-adjusting event as per IS 10. If disclosure is not given, financial statements are materially misstated. So how many marks will I get here? Another 3. Government grant. We have an accounting treatment, we have a materiality, we have an under and over statement that the profit is overstated or operating profit is overstated. Another 3 marks. 9 marks gone. Revenue. Revenue is more about management bias. So when I'm writing about management bias, revenue with management bias, so I will fetch 2 marks here because no accounting treatment's coming in. It's just about the management bias. Is that clear to all of you? But understand one thing important. Do examining team tell us that if you identify a percentage, if you identify something rising and falling, and you use it as part of your answer, will you get an additional half a mark for the percentages? Yes. So did you found 21.6%? Yes. Did you found 9.5%? Yes. Now, not every student will find it in the exam, but if you find it, you will get 0.5 marks for each uh, increase or decrease calculated, shown in the answer. Shown in the answer. So will you get these extra marks? If not in technical marks, will it be part of your professional marks? Yes. If not in technical marks, is it part of your 10 professional marks? Yes. So can this revenue management bias can become 3 marks with your 21.6% and 9.5%? Can it become a worthy of 3 marks? Even though if you're not getting 3 technical marks, you're getting 2 technical and 1 professional. right? So please, percentages are important. Next, new control system. On control system, how many marks will we give? Three or two? Generally, control risk. Control risk is 3 marks or 2 marks? 2 marks. Impairment. Impairment is 3 marks, 2 marks. We have an accounting treatment. We have a value. We have an under and over statement. Very good answer. 3 marks. Okay. Provision. EcoGuard. EcoGuard. We have an ICE 37. We have a materiality. We have an under and over statement. How many marks? 3. Now see how many marks you have. How many marks you had to score? 16. How many have we got? We got 3 from joint venture, 3 from disclosure, 6, 3 from government grant, 9, 2 from revenue, 11, 2 from new system, 11 and 12, 13, 13, 3 from impairment, 16, 16 and 3 from EcoGuard, 19 marks. Do we need to write all this? Do we need to write all this? No. From these 19 technical marks, how many we have to choose to write? 16 marks. So can we eliminate few risk in writing the answer? Whichever you believe is you're not good at writing. Whichever you believe you're not good at writing, you can eliminate them, right? If I want to write good risk, I would prefer the 3 marks more. See, I have 3 marks joint venture, 3 marks proposed acquisition, 3 marks government grant, 3, 6, 9, 9 and 3 for impairment, 12, 12 and 3 for provision, 12 and 3, 15. I got 15 marks. Now I just write 1 2 mark risk, any 1 2 mark risk, either revenue, either new control system. And we also have the risk. We also have another risk. Sorry, we have new client, additional risk, in opening balances being wrongly brought forward. We're not saying detection risk. It's not an audit risk question. Otherwise, we could have said detection risk in an audit risk answer. Additional risk in opening balances wrongly brought forward. We were not the auditor last year. So opening balances could be materially misstated. Am I right or wrong? So opening balances could be materially misstated. So you can have another 2 marks. So it's going up to 21 marks. You have to choose 16 marks to write. So prefer the 3 marks risk first. If you can write 5 3 marks risk, you're going up to 15 marks and 1 2 mark risk, either new client, either new system, or either revenue, anyone. So 5 3 marks risk and 1 2 mark risk. Are you getting clear? To go over the line, 15 plus 2 will be 17 marks. Are you all clear? So do you had a space? Do you had a breathing space? We went over exhibit 2, we went over exhibit 3, we copy pasted whatever was relevant, and we found that we're getting more marks than we required, and we can choose the best we can write. That this is careful planning, 24 minutes. You know you have to make procedures on impairment, right or wrong? Do you have to make procedures on impairment? Yes. So which paragraph will give us some impairment? Have you copied the paragraph for impairment? So the moment you copy the paragraph of impairment, you will copy paste it 2 times. One under the ROM, and you will copy paste the same paragraph under procedures, because you have to make procedures from the impairment paragraph for 6 marks. Right or wrong? Do you need to use the paragraph on impairment to write the procedures on impairment? Do you know my mnemonic? Procedures have to be case specific. So will you take something from the case of impairment to write your 6 marks procedures, all of you? So will you copy paste the impairment paragraph under B and C, right or wrong? Will you copy paste the paragraph of impairment both under B and C, right, wrong? Is it right or wrong to copy paste the paragraph under both B and C? Right, thank you. Okay, we left with C, D, sorry, ethical issues. Uh, in the reading and planning time, right? Now, honestly tell me, the amount of copy paste I have done and the big chunks of copy paste I have done, when I start writing the answer, will this be helpful to me? And definitely I will be deleting the extra copy paste when I frame my answer. But will this copy paste help me to write a good answer in 74 minutes? And will I go back to the exhibits? No. But if you copy paste in an inappropriate manner, you might forget something and you might go back to the exhibits. You're wasting your time. So, are you getting some sense of reading and planning time, all of you? Okay, last exhibit number 4. Why we have to read exhibit number 4? For the requirement number D, ethical issues. Let's see what ethical issues we have so we can copy paste and finish off our reading and planning time. Let's see the ethical issues to copy paste in the D requirement. As part of the group strategy, the group management is looking to expand operations into a new market relating to skincare brand. They're operating clubs, but they now want to get into the skincare part. The expansion will not only diversify revenue streams for the group, but will also reinforce its premium positioning by offering exclusive branded products that can be sold at the spa and the leisure club. So you can sell those skin related products at your spas and leisure club. Expansion, para number 2, expansion would be through the acquisition of an existing company which manufacture the retail niche skin care product. A potential target, Imperial Company, has been identified and preliminary discussions have taken place between the management of the two companies. So you have a proposed target, Imperial. Discussions are going between management. The group finance director has asked for the firm advice about the potential acquisition. So whenever you are asked for advice, the ethical threats would start coming in. So the group finance director has asked for the firm advice about the potential acquisition and specifically regarding the financing of the transaction. So the group has asked for your advice on the acquisition and also about the financing of the transaction. So we have a firm advice here, firm advice about, and we have some threats coming here. If you advise on the potential acquisition, management threat and definitely advocacy would come in, specifically regarding financing of the transaction. Financing means self-review because if you advise on financing, it's not just advocacy, but advice on financing means financing will later become part of your financial statement and it will also generate a self-review threat because you are the existing auditor. So it's not just about advocacy, it's also about self-review as well. Definitely fees comes secondary. For everything we have fees. So if we finish off our marks without self-interest, better. But if you're not finishing off your marks without self-interest, you can. Because for everything you do, you have a fees. But is everyone clear about advocacy and management threats and about self-review, particularly self-review coming from financing of the transactions? So we have something about potential advocacies and self-review coming here primarily. Okay, next. So we had this as the first one, right? Okay, Imperial Company is an audit client of Baxter, and so the firm has considerable knowledge. Is this a conflict of interest? Imperial is already our client. And this Regal is also our client. Regal is our client, the company acquiring, and the company being acquired is also our client. Is it a conflict of interest? Do we have both the companies with the same audit firm? Do we have confidentiality issues? As we have more knowledge of Imperial, can we disclose some confidential information about Imperial? Because we are the auditors, we know so much about them. So do we have a conflict of interest? Do we need to apply the safeguards of conflict of interest you remember from my lectures? So there is another threat coming here. Number 2, which is conflict of interest here. And you need to apply the possible safeguards like informing both the clients, taking permission from both the clients, having different teams, having a confidentiality agreement. So we have a conflict of interest coming here as well. Okay, finishing off that, we move to the next one. The group finance director has communicated that they would like the audit partner to attend Regal group board meeting on a monthly basis so that management can be aware of any issues related to audit as soon as possible. Uh, Partner attending the board meetings on a monthly basis, keeping management update about any audit related issues. This is nothing unethical, right? The code of conduct give us permission that the partner can attend meetings, provided those meetings only have an agenda of audit and audit related matters. Partner do attend meetings with board, communication to those charged with governance, ISA 260 and 265, communication to those charged with governance. So partners do have attendance at board meetings to raise issues, raise concerns about audit. So for that purpose, it's permissible. But if you're sitting in the board and management is asking for your advice, or management is asking for your advice on certain business issues, then that would give rise to advocacy threats and management threat. But just for the purpose of audit, that's perfectly fine. So engagement partner attending a meeting for the purpose of discussing the audit issues, that is perfectly fine. Number three, yes, it's permissible, uh, but no business decision should be taken. But no decision making should be done by partner on business matters. It should not be the case that the client asks you to give some advice on business matters in a board meeting. You have to refrain from that. Okay, lastly, they have also asked if the firm audit managers could be seconded to replace for a temporary replacement of the CFO who recently left. So they want a temporary secondment of the manager to work as a CFO. How many times have you seen this in the past paper? A temporary secondment of staff. This will give rise to self-review. This will also give rise to familiarity because you are working in a position of a CFO. You will make a lot of friendships with people around the organization over a short period of time. Temporary. If temporary is short term, it's allowed. So the period is important. And secondly, uh, the person, the manager who is being appointed as a CFO should not be part of the audit team because it will give rise to a significant self-review threat because you're working in a capacity of a CFO where you will take a lot of decisions. And CFO means financial statements. CFO means a lot of decisions around financial statements. So it's a very significant self-review threat if a manager becomes a CFO for a temporary period of time. So in my opinion, it should not be the change of the manager. It should not be taken because this temporary arrangement is very severe because CFO is a very important position. CFO is around the financial statement, decisions around the financial statement. So you will be taking lots of decisions around financial statement, which will compromise the objectivity of your audit firm. So generally, a temporary staff arrangement is allowed. We need to look into the terms, how long, and if you still believe the manager should go and work as a CFO, should not be part of the audit team later. Are you all clear with this? So a couple of issues coming here. We had like 4 bullets on your screens, and under each bullets we have a lot of issues and safeguards as well, right? So 10 marks, including safeguards. So issue and safeguard accumulated to 10 marks. Now that finishes off our reading and planning time of 24 minutes. I hope you got some sense of what to do in reading and planning time. Now look at this. Look at this word processor in front of you. Now, when you start writing the answer, you can easily write it. Just let's quickly write you have to write a paragraph on materiality, right? For 3 marks. You need to write an introduction of a briefing note here. So you need to write here, write the introduction. I'll show you how to write it down. Write the introduction here. Then you have to discuss the matters planning to first year audit, 1, 2, 3, 4, 5. So you have to write those 5 planning matters here and go on down. Please ensure you write this paragraph about conclusion and prioritization. Which two of the risk above will be prioritized and why? Is everyone clear on that? Okay, now just let's see the answer. Now, just to save my time, um, In 74 minutes, you have to write an answer. And I wrote one for myself. This. Can you see this answer in front of your screen where we can just have a 30 minutes time span just to take you through my answer and then share that with you? Uh, I even shared this answer a little bit in my IFRS 18 session when I was trying to connect the terminologies of IFRS 18 with the mock exam, right? I hope you remember that. Okay, so we're starting with a briefing note, to from date subject. So that's exactly, please, this is important. We'll try to get through the professional marks quickly today as well. So, these are communication skill marks. You have to write these communication skill marks to from date subject briefing note introduction. And look at my introduction here. How skim that is. The purpose of writing this briefing note is to explain the planning matters for the first year audit, comma, evaluate the risk of material misstatement, two, comma, procedures on impairment and ethical and professional. I didn't drag it. I just kept it to the point. I have to do A, I have to do B, I have to do C, I have to do D. Look at my introduction. It should not be longer than this. So, briefing note to, from, date, subject, intro. Now, this is all also giving you the communication skill marks because you're laying down the structure of your briefing note. Then, initial audit engagement. How many marks we had for initial audit engagement? 5. So, this is a part A. Now, in the part A, you had the initial audit engagement for 5 marks. Okay. Now, see how you write. Communication with the previous auditor. Please, you can read that on your own. I wrote 2 points under communication with the previous auditor. Can you see the 2 points? Can you see the 2 bullets under communication with the previous auditor? You have to present the answer in a manner where 5 points are visible. So when anyone checking my answer would see, okay, I wrote 2 points under the heading number 1, 2 marks. Then discussion with management, because it's a first year audit. I need to have a lot of planning meetings with the management. I need to take a lot of knowledge of business from the management because it's a first year audit. And in the first year audit, you need a lot of knowledge. 1 point under discussion. 3. Opening balances. 4 points. And understanding of the business. 5. 5 points I wrote under 4 headings. But anyone checking my paper can see 5 points because they're very properly presented. Now that's a 5 marks answer with proper headings and paragraphs. And how many times I've emphasized on headings and subheadings, and still I find 50% of the student not doing it. You need to be very presentable in a theoretical paper, whether it's AAA or it's SBL or the AA I teach. You go down to the second requirement, risk of material misstatement. The very first thing under that, I put my materiality paragraph, and I specifically mentioned profit before income taxes as a right terminology. And I determined my materiality. Considering it was a first year audit, I choose the lowest materiality possible, which was, sorry, just 1 minute. I choose the lowest possible materiality, which was $620,000. That was the lowest. And I saw all the mock I've seen so far. Each one of you have taken $620,000 because it was a new audit client. So we took the lowest threshold possible. So the moment you write this, you're getting 3 marks, 3 technical marks here for materiality. Then you go down. You start with your audit risk, joint venture Aurora Company. I wrote about joint venture Aurora Company. Look at my first statement. In the first statement, I wrote that this $5 million is material as it exceeds the threshold of 0.62 million. My first sentence. Then I wrote about the accounting treatment about joint venture, that it should be classified using the equity accounting. And then I wrote about the risk that the management might not be using the equity accounting rightly. And this comes my risk. 3 paragraphs, 1 for materiality, 1 for treatment, 1 for risk. And this will give me 3 marks. Then I wrote an additional risk about classification coming from IFRS 18. Please do watch my IFRS 18 session for that. I'm not covering it again. Please watch my IFRS 18 session if you have any confusion with this yellow highlighted paragraph. Planned acquisition of Zenith. The acquisition of Zenith, I mentioned here, is this is a material non-adjusting event because acquisition is material. We don't need to take the numbers. And I then mentioned it's a non-adjusting event and how it should be disclosed. And the risk is that the disclosure is not correctly made and the resulting misstatement. So the structure, 3 marks. Then I went down with the government grant. On the government grant, I give myself 5 marks. Why? Because there could be one situation in exam which can give you 5 marks. And that situation is when one situation gives you multiple risk. Now, there are 2 risks with government grant. Understand this carefully. Number one, first of all, you have recognized the grant in full. And we all know that. Despite the fact you have not spent a single penny of the grant. So 12.4 million have been recorded in the operating profit, which is wrong. That means your operating profits are overstated and your deferred liability, your deferred income is understated. Now that's one of the risks, right? Number two, there is an additional risk. See, I also mentioned here the zero, that 12.4 million grant is so important that if it is not recorded, your profit before interest and tax would be zero. Look at this. Look at this paragraph here. Just read this paragraph here quickly, which I've highlighted. This is additional 2 marks from government grant. One is the recognition of the grant, right? Which they have recorded in the profit despite a single penny not being spent, which was one issue. But what about the grant becoming repayable? Read the paragraph on your screen, please, quickly. What if they've not used the grant according to the government conditions, or they have spent half the grant on government condition and half elsewhere? Will it become repayable? Should we need to recognize a provision for the grant becoming repayable? Is that an associated risk in ICE 20? Is that an associated risk in ICE 20? So if you write any additional risk from a same situation, which is different, one is the recognition in the operating profit, and one is the amount becoming repayable. Are these two discrete risks from ICE 20? Yes. So examining team says if from one situation you are writing 2 risks, the maximum number of marks you can get is 5. But the 5 mark situation is only one in exam. The 5 mark situation is only one in exam, and in some exam papers you hardly get it. Are you learning this? So think about any 5 mark situation coming to your exam on 1st of September. You need to have 2 discrete risks from the same heading. Is that clear to all of you? Impairment is 3 marks. We talked about impairment, that how management has calculated the value in use wrongly. We talked about the materiality of impairment. We talked about the calculation of impairment the management has done and what is wrong in the management impairment calculation. We talked about the risk that the impairment loss could be understated and operating profit overstated. And again, this yellow part is the IFRS 18. Please watch my IFRS 18 session for that. I'm not just repeating the same thing again. Then we had the risk of damages to the pressure damages coming out of pressure group, the $2 million damages. I linked that $2 million with provision. So I talked about the operating expenses and liabilities and operating profit being overstated. So I linked that with $2 million being material. And then talking about the accounting treatment for provision, I saved my time rather than spending time on both the contingent side and both the provision side. I thought it's a provision because the amount is reliably made. Management bias. The company has an ambitious plan that includes a joint venture and an acquisition. This can create significant pressure on management to report strong financial performance, and there is a risk of management biasness. There are some indications, for example, revenue is projected to increase by 22%, whereas the number of members have increased by 9.5%. Profit before income tax is projected. Sorry, just 1 minute. Okay. This trend indicates that the profit could be overstated. So management bias is 2 marks. I linked management bias with a couple of things the management is doing, like acquisition, joint venture. So they might be fabricating financial statements for better pictures, and more importantly, they have some misstatements in revenue rising by 22%, whereas the members are only rising by 9.5. Then I give my prioritization paragraph, or you can also say conclusion paragraph, whichever term you want to use in exam. Conclusion or prioritization, both are good. Don't use both of them, one of them. Prioritization is better because the question is asking you to evaluate and prioritize the significant risk. So prioritization seems a more better term. The grant is the highest quantitative risk of material misstatement that has been identified and involve a significant area of management bias, and therefore is deemed to be the higher priority risk. So why I considered the grant as important? Because first of all, it was the highest quantitative risk among all, number one, and involves a significant risk of management bias, as the grant amount and the profit before interest and tax amount, profit before interest and profit before income taxes, sorry, profit before income taxes were $12.4 million. So if grant income is not recorded, the profit would be zero. So that's one of the reason that it's considered therefore is deemed to be the highest priority risk. Similarly, the manipulation of assets and profits by incorrectly calculating the impairment loss is classified as a high risk, as along with wrong accounting treatment. There is a large amount of estimation, so on and so forth. Impairment is the second important risk. Why? A lot of estimations, large amount of estimations going in, number one. Number two, wrong, incorrect calculation of impairment loss. And for that reason, it's been classified as important. So grant is important on the basis of quantitative risk value. Impairment is important because of the subjectivity, estimations, and the wrong calculation. So similarly, the manipulation of assets and profit related with incorrect impairment loss is important. So to risk and justified. So the problem with the student is students do tell that this and that is this and that, to tell that these risks are important and should be prioritized, but fail to tell the justification. Why? I hope you get a clear why to write. Then you go to your procedures. You need to write procedures on impairment. You can just see my answer from here. I've given procedures over here. You can learn the procedures on impairment. They're all coming from the scenario. None of the procedure is outside scenario. So just please go down and check my procedures. You need to have total of 6 procedures. So all 6 of them are here. None of them are missed in. So you can just take the way of writing procedures, see how briefly I wrote them. And then finally, you had professional issues, right? Ethical and professional issues for 10 marks. I've mentioned over here that for the sake of guidance, I wrote 12 mark answer. You need to have 10 marks answer. So I wrote 12 points. You need 10 points. You can just see through my answer. Can you see these marks allocated here? 1, 1. Can you see these red marks allocated? So when you go through my answer, I've shown you where have I scored 1, 1, 1. And in all, I have scored 12. But you need to choose 10 marks to write. So I've given the marking scheme. Advice on acquisition was the first ethical issue. Firm advice on financing of transaction was the second issue. Then we had the attendance at the board meeting was the third issue. And then we had audit manager secondment as the fourth issue. Headings. Please break ethical issues into heading. Audit manager secondment was a proper term used by the examiner. Attending the board meeting was a proper term. Advise on the financing of the transaction and advise on the acquisition. Now, when the marker is checking the paper, he or she will be so happy because he can see the breakup. He can see, okay, the student is writing about the advice on acquisition. Okay, now you're writing about the advice on financing the transaction. Now you're writing about the attendance at the board meeting. Now you're writing about the audit manager's secondment. Make the life easier for the marker. And see, I've allocated the marks in red, 1, 1, wherever I getting the marks. So you can track how I made up the 12 marks. You need to choose 12. Headings, headings, headings is important. Try breaking your answer for risk, audit risk, business risk, for ethical issues. Procedures are written in numbers. Even I broke the answer for planning matters first year audit. Are you all clear with the structure of the answer, the way to phrase the answer? I will be sharing this answer with all of you. You can download it, take a printout of it, and just go over it and just see the way to develop the answer and writing the points. I have covered the issues as well, right? Now, one last thing before we exit the session, something which needs attention. Okay. Uh, it's the partner email. Okay. Sorry, not the partner email, the requirements. Can you see in requirements, it's written over here, professional marks will be awarded for demonstrating skill in communication, analysis and evaluation, professional skepticism and judgment, and commercial acumen. Control C, and we take it back to the Word file. I think it will not go back to the Word file. So just let's do the copy paste in your word processor. Okay, Control C, we take the word processor again, and in the word processor, just let you guide you about the professional skill marks, how you get them. Professional skill marks. Control C. Can you all see this on your screen? Please confirm me that. Can you all see the write-up I'm going through for professional skill marks? Okay, now listen to me carefully. Uh, did we had any requirements about accepting a new client or taking a decision about accepting a new client, like practice management matters in question number one, where the management is asking you to, where the examining team is asking you to take a decision about accepting a new client? We had no question like such, right? Did we had a question on business risk? No. So commercial acumen is mostly a skill which goes very well with business risk when you're writing the risk on the business, right? Then that's where you think about the commercial acumen, the loss to the business or the damage to the business, etc. And commercial acumen is a skill which you also exercise when you are taking a decision about accepting an engagement or accepting a new client, right? So we were already told in the scenario that we have accepted the client. You only need to consider the planning matters for the first year audit. So I believe in the first question, when the professional skills are given to you, they're just like given they're just given all four of them here. Not necessarily all four are being used in the answer. Like every time the examining team will say communication, comma, analysis, comma, professional skepticism and judgment and commercial acumen. But yes, if you have a business risk answer, and you have an answer on accepting a new audit client or an engagement from an existing client, normally we get questions in that context in question number one. You can fetch marks on commercial acumen. But basically, what we have seen in the mock was going around communication. The mock was going around communication. It was going around analysis and evaluation. It was going around professional skepticism and judgment. Now, where have we gone through it? Number one, communication was all about the briefing note. and we structured it well. It was not just the briefing note, it was adhering to partner instructions, adhering to partner instructions. So these were two important things which you need for communication skill marks. Briefing note, the format, to, from, date, subject, introduction. That is the format. That is the format. Putting the heading briefing note. So you have to put the heading briefing note as well. So that's all part of the format. Logical flow, ABCD. You didn't had a haphazard flow that you did B first and A after. A, B, C, D, logical flow. And number two is adhering to the partner instruction. Partner told us that follow a certain exhibit. So following the right exhibits for the answer, not identifying any risk from exhibit 4, only identifying risk from exhibit 1, 2, 3, adhering to the instructions, right? Following the right exhibits, and any other note given, any other note given under the requirements. So this is where you can fetch most of your communication skill marks in this case, right? Analysis and evaluation. You were evaluating lots of things, right? You were evaluating the planning methods in the first year audit. And when you were evaluating the planning methods in the first year audit, you was trying to bring the knowledge and link that to Regal. You did evaluated the points about predecessor auditor or communication with the management or opening balances. So you try to brought the best of the points, work around a new client. So planning matters were well evaluated because we thought about opening balances, which is a very specific ISA 510 requirement. We talked about the predecessor auditor, which is another predecessor auditor, which is a very specific point in the first year planning. And then we talked about knowledge of business because we need a lot of that in the first year audit. So your matters have to be good, mature for a proper analysis and evaluation around the first year audit. Then we had analysis and evaluation of the ROM. You had you thought about each ROM well. Each ROM was well evaluated for materiality. Each ROM was well evaluated for the treatment. Each ROM was well evaluated for the risk and misstatement, under and overstatement. So evaluation of the ROM, including we did found the percentage rise in revenue. We did find the percentage rise in members. Now that was something good as part of analysis and evaluation, making use of the numbers, finding the rise and fall. So that's where the analysis and evaluation was coming in. Even for the procedures, we made the procedures from the case given around impairment. We did not wrote any procedure out of the case. We did not wrote any journal procedures on impairment. We saw what was happening in the case, particularly value in use, particularly how management has determined the value in use, particularly around fair value, because this is all given in the scenario. So procedures tailored, specific to the case, that's part of analysis and evaluation, and so on and so forth. And even for the ethical and professional issues, we analyze them in context of the information, and we did talk about not just naming a threat, but justifying why it is a threat and giving a reasonable or giving an adequate safeguard. One thing, which it needs clarification. Commercial acumen can come here in the context of ethical, because in ethical and professional issues, we might put a safeguard that the firm is prohibited. The firm should not do this, or the firm should not send the manager for secondment. So that's where commercial acumen is coming in, because that's where you're taking a decision which can affect the self-interest of the firm. So, but you give precedence to ethics. You give precedence to ethics over self-interest. So, did we took decisions like the firm should not do this, or probably the firm should not accept this. You can take such decisions in ethics, right? You can take such decisions in ethics, right? That the firm should not do this, or the firm should not send the partner to the board meetings, or the firm should not send the manager for secondment, or the firm should not give advice on the corporate finance. So such issues impact your commercial acumen, right? But you are giving precedence to ethics over commercial acumen. Okay, and lastly, skepticism and judgment. We exercise our skepticism, right? A lot of places we exercise our skepticism. Firstly, we talked about the grant recognized, and if not, the profit before income taxes would be zero. So that was one area where we were skeptical, would be zero. We were skeptical about management bias. We were skeptical about management bias, particularly management bias relating to the 21% rise in revenue and 9.5% rise in members. So we were skeptical about any overstatement in that case. So we had a bit of skepticism coming in. More importantly, we had judgments about materiality, judgment about materiality level. We had an exercise of judgment that materiality should be $0.62 million. So that was one judgment. Number two judgment we had was about the judgment about actions to be taken for ethical issues. That was a second judgment. Yes, we had a judgment about prioritization. Which of the two risks should be prioritized? Which two of the which two risk should be prioritized and why? Should be prioritized and why? So you can get those 1 1 1 1 marks across your answers as well. Communication is like 3 or 4 marks. The remaining 6 to 7 marks is coming from analysis, evaluation, skepticism, and judgment. But if you have done all such things in your answer, you have a fair enough chance of scoring good marks around professional skill marks in from the question number 1. Now, honestly, tell me that have you got a clarity about reading and planning time to 24 minutes? 1 minute has to be given for the screen on the right. Then you had 23 minutes. From those 23 minutes, you will open up the partner email and you will open up the word processor. You will read through the requirements. You will copy paste the requirements and you will frame the briefing note to from date, subject, intro, and everything. You will make a skeleton of the briefing note. So, and read the requirement. So I think you will be gone with 4 more minutes. 19 minutes you will have when you start reading the exhibit 2, 3, and 4. And with the amount of information we had in exhibit 2, 3, and 4, I think it was fair enough to read that in 19 minutes. Then you have 74 minutes, ideally, or 75 minutes to write the answer. But it all depends upon how much have you copy pasted and how intelligently have you copy pasted. So if you have copy pasted intelligently, when you sit down to write the answer, you will be writing it on the right track. So please do read my answer, do go over my answer. And if you have any further questions or queries, you still have an access to me through the WhatsApp group where you can ask questions too. Is everyone sound and clear with this mock debrief on the first question? I hope, definitely, thank you, Isabel. I hope you got a lot of clarifications, a lot of things which can improve your scoring prospects on 1st of September. I hope we talked about some misconceptions, some journal misunderstandings the students have about question number 1. I hope lots of clarifications have come your way, right? Even though it was a long session, but I hope this was insightful as well, right? Vijay, I'll give you the email for submitting mock on the WhatsApp group because this session will also be going public. So I would not like the public sending me the mocks as well. It's only for my registered student. So Vijay, you can ask in the WhatsApp group. The students will give you or I'll give you. Thank you. Okay, I'll be back with the session 2 and 3, hopefully one tomorrow and one day after tomorrow. So we can wrap this up by 22nd of August. And I will be sharing the recording and the answers and whatever I wrote on the word response area. So whatever I wrote here on the word response area, I will be sharing this. And whatever I wrote on the Word file, I'll be sharing that. So don't worry about it at all, right? Everything will be coming to you. And yes, you can submit the mock today, right? Okay, all the best. Isabel, I'll confirm the times probably in the next couple of hours. And I'll ensure the time for the session tomorrow is communicated at least 1 to 2 hours before, so you can plan it carefully. But expect it to happen at the same time we had today, something by 9:30 uh, a.m. Pakistan time, probably around that time. Okay, all the best to all of you, and come back tomorrow and day after tomorrow for session 2 and 3. Goodbye and Allah Hafiz, all of you. You're all welcome.